Good morning and welcome to Tronconi, Segarra and Associates COVID-19 year-end webinar. I'm Dan Spada and we thank you for joining us today. It's been a few months since our last COVID webinar and we hope everyone has been healthy, safe, and in a year able to enjoy some part of the December holiday season, especially those celebrating the upcoming Hanukkah holiday this weekend. Before we begin, I want to just direct your attention to the bar in what is likely the upper right-hand corner of your screen. In this area, you will be able to download today's slide deck, as well as the handouts related to the proposed legislation that we'll discuss. In this area, you will also be able to submit questions for our live Q&A session at the end of our presentation. I will ask that you please do not submit questions about future programs until we are able to discuss them during the presentation, as I'm sure there will be many questions about what comes next, and we want to be able to answer as many as possible. And hopefully we cover many of your questions during our live presentation. I also want to remind everyone that we still have our COVID-19 Resource Center, part of our tsacpa.com website. A replay of today's presentation, as well as the slides, will be available in that location. Even though we haven't been doing webinars lately, we're still updating the COVID-19 Resource Center with all the latest news around PPP and other COVID programs. If and when new legislation does pass, we would encourage you to check out that site, and we'll likely have another webinar shortly after. Today's presenters, if you've joined us in the past, are still Tom Mazurek and Chuck Pezzino, the two leaders of our COVID-19 team. At this time, I'll welcome in both Tom and Chuck. And gentlemen, nice to be doing webinars with you again, although unfortunately we were hoping we would not be talking about COVID-19 still in December.
Yeah, Dan, it seems like it's been forever, about 4 months since we've had our last webinar. I know Chuck and I have both missed the chance to connect with our clients and friends here. While it was crazy and nerve-wracking often preparing for these webinars, I think it was a great part of our week that we had, and it's glad to be back and wish we were talking about something else, but I think we've got a lot of great information to share with you today. Especially on the Paycheck Protection Program. Still a lot of questions and issues related to loan forgiveness and what's going on generally with the program. Want to give everybody a quick update on other COVID-19 relief measures that were part of the CARES Act and the other government legislation. And then finally, we'll talk about this proposed stimulus and what we see coming in the next few weeks, hopefully, into the new year. And then, as Dan said, we'll be here to answer some questions at the end of the presentation. To start things out, since it's been a while and it's been a long year, long 8 months actually, since the CARES Act was enacted in March and the application process for the PPP opened up on April 3rd, just wanted to share with you a timeline of the key events that happened over the course of these 8 months. You can see here there was additional legislation passed in April that added new funding once the program's initial funds, $349 billion, ran out. Then I think one of the biggest keys was in June when the Flexibility Act was passed. I mean, legislators did a great job rolling the PPP out as part of the CARES Act. However, there were a lot of issues they didn't consider, and things were corrected in the Flexibility Act, including extending the covered period to 24 weeks, putting in the 60-40 rule regarding payroll and other expenses, and then providing new FTE safe harbors and some other favorable rules related to paying back the loan and whatnot. As you all know, the process did close on August 8th. That was the last day you can get a PPP loan. And since then, SBA has rolled out their forgiveness platform and even put out another forgiveness application form. So this timeline takes you up to late August, early October. Chuck and Dan are gonna touch on a few things that have happened since then that are relevant to the discussion. And it's fun, it's interesting to know that even with the CARES Act, there were, 25 different interim final rules, 52 FAQs, another 27 FAQs on loan forgiveness, plus other guidance issued by SBA for lenders. So it's been a lot to digest for everyone over the course of the last 8 months. Hopefully we've been able to help you out with that, and hopefully today we're going to share some more information with you as well. The next slide here, just real quick, I'm sure you're all sick of this. You've seen me talk about this before. Just the PPP loan approvals, 5.2 million loans. It's just amazing to think that many loans were processed in such a short period of time, and the $525 billion that went to businesses, and individuals across the U.S. to help them through the pandemic. It was an amazing effort by the SBA, by lenders, by everyone to get this up and rolling. And now you can see with forgiveness, these stats are as of November 22nd. SBA hasn't updated it. They're off to a slow start with forgiveness. Only about 367,000 applications have been forgiven by SBA, only about 38 billion. But I think you're going to see that will step up now. I think a lot of people were waiting to see whether or not Congress was going to pass additional legislation regarding forgiveness. And I think that might be coming. So I think we're going to see that step up. And you can see there's $134 billion of the original PPP funds remaining. That's a key number. That's going to roll into potentially new legislation for another round of PPP. One last thing I want to point out before I hand over to Chuck on the next slide. You might have seen this, on the media and TV and the news, on the internet. On December 1st, the SBA released all PPP loan information to the general public pursuant to a court order. This was not unexpected. There was a number of lawsuits brought against the SBA, primarily the Washington Post and other national news organizations were suing SBA under the Freedom of Information Act to release all borrower information. This includes the business name, their address, the loan amount, entity type, lender, jobs reported. If you remember back in July, they did release some information on loans greater than $150,000, but they didn't include all this information. And for loans under that amount, they just kind of released it in general categories. So this, is subject to a lot of scrutiny. You've probably seen it on TV, on the news, like I said. A lot of these people are looking to drum up stories about corruption and fraud, and I think it's important that everyone who takes a loan, realize that you shouldn't apologize for it. At the time that we were doing the applications in April and May for the most part, people did not know what was coming. We didn't know how the economy was going to do. We didn't know what the pandemic was going to do. So I think a lot of people are justified in the loans that they took, and I think they're going to get forgiveness on them. Obviously there's a few bad apples, but I don't think that should color the whole program itself. So at this point, I want to turn it over to my partner, Chuck Pezzino, and he's going to dive into some more information on the PPP.
Okay, thank you, Tom. I appreciate that introduction. I'm just going to spend a minute talking about anyone that received PPP loans that were less than $2 million, and then I'm going to talk a little bit about those that received loans that were $2 million, either individually or in the aggregate across all the businesses that they own. So with respect to less than $2 million, the SBA has indicated that those loans won't automatically be audited. There might be situations that are audited, so they're not precluded from doing so, but it's not a given like it will be for those that are greater than $2 million. As Tom said, though, putting yourself back in your shoes when you applied for the loan maybe in March, well, probably not March, but April or May of 2020, it's still important to make sure that you have good documentation as to the necessity for that loan. Even though you're not subject to an audit necessarily, and even though we're seeing great statistics on people applying for forgiveness and receiving it, there's still going to be a 6-year window of time that the SBA will still have an opportunity to challenge you if they decide to. And having that documentation in place is very, very important. It's just, as time goes on, you'll forget the need or the things that were going through your business at the time. And, having a memo talking about the cash flow necessity of the loan and, the projections that the business was looking at that time and the uncertainty involved, all that's going to be important. To the extent that you receive the loan either individually greater than $2 million or in the aggregate greater than $2 million, a couple things have transpired. One, back in April, Mnuchin said that those loans will all be audited. The SBA has formally announced that there will be an audit for all loans greater than $2 million. We still don't know exactly what that audit might look like. We don't know how deep they'll dive. We don't know what information they're going to ask for. But what they have done to maybe show their hand just a little bit is produce a form called 3509 for for-profit borrowers and 3510 for nonprofit borrowers. These forms essentially will be sent to you if you're in this category of greater than $2 million, individually or the aggregate, by your lender. And it'll happen at the time after you apply for forgiveness. Your lender will approve your forgiveness, send it to the SBA. The SBA will then send this form back to the lender, who then will send it to you. Once you receive it from your lender, you'll have 10 days to complete the form, resubmit it to the lender, who will then resubmit it to the SBA. This form, in the SBA's own words, is information gathering. They're going to use it in conjunction with making the determination of whether or not you had a necessity for the loan. There's not necessarily any I gotchas in this particular form, but there are some interesting questions that you'll need to be prepared to answer. I think the questions that jump out to me or stand out in my mind are, they're asking you to compare your Q2 revenue in 2020 compared with Q2 revenue in 2019, assuming you were in business in Q2 2019. And that's one form of showing how impacted your business was at the time you were likely making your original application for this loan. They're also asking about cash and cash equivalents that were on hand at the time that you made the loan application, so they're getting an idea or a sense of how much cash you had available. They're asking questions about whether you were a essential business or not essential business, whether you were shut down or not shut down. They're asking questions about any capital improvements you might have made after the time that you received your loan proceeds. So what did you do with the loan proceeds besides paying your employees? So, again, a lot of this information is just sent to the SBA for their consideration. Ultimately, if they challenge you on the necessity, you'll still have an opportunity to plead your case and, discuss specifics. But this particular questionnaire was a surprise, and just wanted to make sure we talked about it a bit. And of course, we're happy to answer questions, and some people have already asked us to review their forms once they've filled them out, which we're also happy to do to make sure that you're putting your best foot forward in the information provided. Obviously, completely true, but making sure we're taking in all things into consideration to make it as easy as possible for the SBA to review this form and ultimately conclude you did indeed need the loan.
And Chuck, who's giving you this? Where do you get this form?
So the form will come from the SBA to your lender, from your lender to you.
Okay.
So, and then you'll submit it back to the lender, who will then submit it to the SBA.
Okay.
So the lender is literally the middleman. You have no direct contact with the SBA in this process.
Okay. And I think you're right, Chuck. I don't think this is a witch hunt of any means for people who borrowed over $2 million in aggregate. It's just a matter they want some information, and I think you're going to have the opportunity to explain the circumstances. Like we said earlier, who knew? The necessity of that loan back in April, nobody knew what the economy was going to do, how their business was going to react to this. So I think you're in good shape.
I agree. I think the most telling thing is the form never asks for Q3 or Q4 revenue compared to the prior year. So, if you're in a situation like most where your Q2 revenue was down significantly and you rebounded in Q3 and Q4, that's not on the form, and that's not taken into consideration. It's all about the necessity at the date you applied. So, I think it's good that they're not asking you about what happened subsequently, other than did you make any significant capital improvements. That is going to be taken into consideration. It doesn't mean what you did was wrong, but if you spend a significant amount on capital improvements during the covered period, that's just one thing you're going to have to explain the rationale. If you needed the money, why did you have extra money to make capital improvements? And we're not talking about buying computers. Everyone did that for people staying at home, or they invested in infrastructure required for work at home situations. That's not a problem. What we're talking about is expanding your building or something more significant along those lines. Again, if you did it, just make sure you're able to explain why you had to do it, and versus was it something that was arbitrary? You had a windfall with PPP loans, you went out there and expanded your building.
I think too, Chuck, even if your loan was less than $2 million, like you said earlier, the SBA has 6 years to come back. It's a long time. It would be good maybe writing that up for yourself in a memo, why you needed that loan, just so you have it on file. You don't know what kind of turnover you're going to have, different employees in there. I think it'd be good to have that in with your documentation as well.
Yeah, we can't stress that enough, Tom. I mean, we all know as time goes by, things slip our memory, and there's turnover in the business, and the business is on the hook potentially for 6 years beyond the date that your loan is forgiven, where the SBA has the opportunity to look at your books and records. So I know we hate writing memos. I've actually helped some people write this type of memo. I can do it for anyone that wants help. So just reach out and let me know, and I can, structure it and get some information from you and put together a nice memo. But it is important to have. Okay, I'm going to switch gears here and just talk a little bit about the loan application, the forgiveness application process. These are really just reminders. So to the extent that you're ready to apply for forgiveness, you're going to have the choice of 3 forms, and really just a reminder that the majority of folks who had loans greater than $50,000, who made any type of reduction in FTEs or salary and wages, and did not fully bring back all their FTEs, are likely going to be using the long form. No problem. It just requires a little bit more information. It's not going to impact your forgiveness. Well, it could impact your forgiveness, but the use of a form isn't going to dictate forgiveness. It's just going to dictate the amount of effort you're going to have to put into the forgiveness process. So if you reduce your FTEs on a net basis, so for instance, if you laid someone off and hired someone else to replace them, that's not a problem. But at the end of the day, if your FTEs during your covered period on average were less than the comparative period of either February 15th to June 30th or January and February 2020, you're likely going to be using the long form and just have a little bit more information to complete. To the extent that you did not lay off any employees, or on a net basis you have the same number of FTEs in the covered period as the comparative period, and you didn't reduce anyone's salary or wages greater than 25%, then you're going to be able to use the easy form and have a little bit less information to provide to the lender and ultimately to the SBA. And if you had a loan less than $50,000, you're automatically going to be able to use the 3508S form, unless, of course, you had other loans in totality that exceeded $2 million, in which case you're not going to be able to use this form. But majority of people that got loans less than 50 can use it. And on the next slide, this is just a snapshot of the 3508S form. You still have to fill out an application form. You're still going to have to include eligible payroll for forgiveness and any other eligible expenses should you need them. But you're just going to make an assertion or a representation that that you can basically follow the rules, but you'll never have to make any kind of assertion with respect to FTEs. Essentially, the FTE equation is completely off the table for loans less than 50, utilizing the 3508S form. So you could have a 90% reduction in FTEs and it's not going to hurt you, which is the advantage of this form and receiving a loan amount less than 50.
Not automatic forgiveness, but it's simplified.
Much more simplified. And again, taking the FTE question off the table is very, very helpful. This is just a decision tree. It basically goes over what I just talked about. But, you know, quite simply, if your loan was $50,000 or less and you didn't have an aggregate of more than $2 million of loans for your other businesses, you can use the 3508. If your loan was greater than 50, and even if it wasn't the aggregate of greater than 2 million, but you're self-employed without employees, or you didn't make any FTE reductions on a net basis, or you didn't reduce salaries and wages by more than 25%, you can still use the easy form. So again, you can get there even if you had an aggregate of more than $2 million of loans, you can still use the easy form if on a net basis your FTEs are the same. If that's not true, then you're just going to be using the long form. Again, it's not going to necessarily impact forgiveness. It's going to require a little bit more time and attention to details. So one of these three forms is likely where you're going to land. So let me just switch gears into some considerations when applying for forgiveness. And I'm just going to give you some sort of tips and tricks we've learned along the way. At this point, we've helped hundreds of businesses apply, and we've had some great success. And here's just some things we've learned along the way. One is that none of the lenders' portals are exactly identical to one another. Each bank, each lender has taken an interpretation of the rules, mostly consistent, but the way they've asked for information, the way they've structured questions, the way the portal's filled out is a little bit different from lender to lender. There were some hiccups early on. I'm aware of one particular lender that was making it extremely challenging to use anything less than 24 weeks. You'll remember that even if you used the 24-week period, you were allowed to apply using 20 weeks, for instance, or 15 weeks, whatever it took to get forgiveness. This particular lender, though, just was forcing almost the borrower to apply using nothing short of 24 weeks, including all of the documentation supplied. I'm not aware that that's actually changed. So what we're generally telling people is that at this point, almost everyone has reached the 24-week, end of their 24-week cover period, assuming that's what you're electing. You had a choice to use 8, but for the most part, I don't know why you would choose that. Might as well just use 24 weeks. And all of your documentation should be on a 24-week basis. Now, using the 24 weeks, it's most likely, unless you're in a unique situation, that all you're going to need to supply is payroll. You can get payroll reports directly from your payroll service provider, assuming you have one, and you can apply using that report somewhat easily. So, it still might take a CPA to kind of look things over just to make sure everything jives and is consistent. But the process is much more simplified using the 24 weeks. Things like business rent and mortgage interest and healthcare expenses paid by the employer on behalf of the employees, 401k contributions or other retirement contributions, all those things may not even be necessary if you have a sufficient amount of payroll to get forgiveness. So we're encouraging people to start there, look at the payroll in the 24 weeks, determine if it's sufficient to get forgiveness. If it is, stop there. All the other information that you've been maintaining on eligible expenditures should continue to be maintained. But the easier you can make this process for review by your lender and the SBA, the better. I have a lot of people that just want to throw everything into the application just because they want, way more expenditures than their loan. They think that's going to help them. It's not. There's no point in doing that. If you're $1 of expenditures more than your loan, you are good. If you're challenged, you'll have all that other information on hand and you'll be able to include it if you need to. But there's no point in blowing the doors off the amount of forgiveness compared to your loan. Just get there and then you're good enough. Now, The payroll reports from the payroll service providers are making it much, much easier. However, even the payroll service providers are making some mistakes. Common mistakes we're seeing are that owners are not limited to $20,833, assuming that they made more than $100,000 in 2019. So a lot of times the payroll service providers just don't know who the owners are. Again, an owner is defined as anyone who's 5% or more of the business. So sometimes you have to make adjustments to the reports to reduce the owner compensation down to $20,833. That's the most common mistake we're seeing. In some certain circumstances, they're forgetting to limit any individual to $46,154 in the 24-week cover period. Again, you'll notice most of my remarks are using the 24-week cover period, which is our recommendation. So sometimes you have to make adjustments to these reports. We can help, but for the most part, you should be able to take the report, submit it with your application, and be done with it. The lenders are also asking for 941 reports. Just keep that in mind. Those are your quarterly tax reports. You can get those from whoever fills them out, either the payroll service provider or your CPA. But other than that, you generally aren't going to need much more, which is great. Okay, so I'm just going to switch gears again and speak a little bit about FTEs. So first and foremost, the FTE calculation can be a little daunting for many. We understand that. If you're able to, you can get these calculations directly from your payroll service provider, which will make it a lot easier. If you're not, we can do these calculations for you. Because these calculations can be a little bit challenging, daunting, a little confusing. But I'm going to go through a ranking system with respect to FTEs here. This is my personal ranking system shared by my partners here, but not necessarily. You may come to a different conclusion, and that's fine. This is just how I see things personally. But that FTE situation you could be in is that you didn't reduce any FTEs in the cover period on average on a net basis compared with your selective comparative period. Reminder, those comparative periods are going to be February 15th through June 30th, 2019, January, February 2020. If you're in that situation, you likely are going to be using the easy form, and you're not going to have to supply any information around FTEs. You're just going to have to make a representation that you did not reduce them. That's that. Very simple, clean, and you don't have to provide any additional information to the lender or the SBA. Second best is Safe Harbor 1. This is going to apply if your business was directly impacted by government regulations. I know I can make this assertion without qualm for restaurants. It's obvious restaurants were shut down for a period of time, and they continue to be impacted by governmental regulations on table restrictions, and now it's obviously much more restricted for Erie County. There's no question that your FTEs were impacted by government regulations. Restaurant businesses can almost always check the box for this and use the easy form, and therefore not worry about an FTE reduction quotient. It's not just restaurants, but they're the most common. We've had questions about, let's say you're a vendor who sells to restaurants, and you're impacted by the restaurant shutdown or slowdown. Well, that's not necessarily direct for you, so I'd be a little bit cautious. It's more indirect. You are impacted, but the government regulations weren't on your business. They were on your customers. So, you have to be careful. We really are encouraging people to make sure they were directly impacted before they check this box. But even if you can't check the box and use the easy form, there's going to be some other outs. So third best, and this one, this one has some cautionary statements that need to be made, but the way the SBA forms work right now, if you're mathematically, you have sufficient payroll such that even with an FTE reduction quotient, and that's going to be based on the average FTEs that you reduced in the cover period compared with your selected comparative period, even if, let's say, it's 10% or 20% down, but your expenditures exceeded your loan by 40%, for instance, you don't have to, the reduction won't impact your forgiveness. Therefore, you can just accept it and move on. You don't need to worry about trying to diminish the quotient because it's not going to have a mathematical impact on you. Now, some will caution you that this isn't the way the program was designed, and I would agree with that, but it's the way the forms are written. The SBA is well aware that the forms are written this way, and they haven't made any changes to that. So I only can assume that they're accepting this as an appropriate mechanism. Is it possible that they could come back and say, nope, you should have applied the reduction quotient against the expenditures only up to the loan amount? Yes, it's possible. But they're accepting applications that are using this methodology, and I can only assume that they're going to continue to do so. So we are promoting this methodology at this point, but there's just cautionary language that there's a chance at some point it could be challenged. Okay, fourth best is going to be Safe Harbor 2. This one is pretty simple. If you reduced your number of FTEs from February 15th through April 26th, which most people did, if they had a reduction that occurred during that period, then if you restore them to the exact same amount or more by December 31st, 2020, or when you submit your loan application, you have your choice. You can wait till December 31st and then submit your application if you want to. But if you restored them, it's got to be the same amount or more. One less is not going to work for you. If that's the case, then you're going to be forgiven of your FTE reduction, and Safe Harbor 2 will apply, and you don't have to worry about the reduction quotient at all. So that's pretty cut and dry, but it's all or nothing. On the final page in this discussion, fifth best, this is an opportunity where even if you had an FTE reduction, if you made a good faith written offer to rehire your employees and they decided no, they're not going to come back, and you couldn't find a qualified employee to take their place, then essentially it's like that FTE reduction never happened for that employee. And if you add them all up and it more than overcomes any FTE reductions you had, then you're good. You're not going to have an FTE reduction quotient. This has to be documented, and you may be required for you to submit at some point to the SBA, although it's not required to be submitted with your forgiveness application initially. Also, if you made a good faith written offer to restore reductions in hours, let's say you previously had a 40-hour employee, you reduced them to 30 because of the pandemic, and you offered to bring them back to 40 and they declined, then that 10-hour reduction won't be held against you. And then, of course, any employees who were fired for cause during the covered period or voluntarily resigned or voluntarily requested a reduction of hours, none of that will be held against you. So this is the fifth best way. Why do I rank it fifth? Because it requires a little bit more documentation and effort. Again, you won't have to initially supply it to the SBA, but unless your lender requires it. But you're going to have to at least document it for your books and records and have it available if requested. So you'll notice it's all about the ease of documentation and effort in applying for forgiveness. Is how I'm ranking these options. Okay, we're continuing to get questions on, should I wait? Should I wait? I'm hearing I should wait. The answer is you likely should not wait. You likely should get your application done as soon as possible. We think there's a possibility that they're going to make it a simplified process for loans that are less than $150,000. We've already talked about loans less than $50,000. We think they're going to increase that to less than $150,000. If they do, it's likely your application process will be simplified. However, if you're already anticipating full forgiveness, the application process isn't hard enough that I would recommend that you continue to wait. Unless, if you had FTE reductions, for instance, and your loan is less than $150,000, and you think you're going to be, impacted and not get full forgiveness, yes, you should wait. But very few companies are in that situation. There was a tax play in waiting, or at least we thought there might be. That's gone. So waiting to submit your application is not going to have any impact on your taxes whatsoever. Tom's going to talk about that briefly. I just can't think of another good reason. If you're anticipating full forgiveness, get it done. Let's not wait for Congress to make any adjustments, because we could be waiting until Q1 or later of next year, just the way things are going. Finally, I just want to say that, we've been helping hundreds of companies, and it's been rewarding and very, very, it's just been fun to do, to be honest with you. It's just the one time a CPA can really see their value in helping companies receive forgiveness. And many have come back to us with great stories of how quick the process was. I think the folks that got their applications in earlier have seen great turnaround. We've seen, less than a month to get forgiveness after you submit your application. We know that's slowing down a little bit. Tom shared some numbers early on. We know that there's a little bit of a backlog in the SBA. It's another great reason not to wait, because the longer you wait, the longer you're going to be sitting in the queue at the SBA for forgiveness. Ultimately, we think you're going to get there with a properly submitted application, which is great. There's no I gotchas, there's no, flies in the ointment that we kind of were, a little bit skeptical about, many of us. It's just not there. You're going to get forgiveness if you submit a properly completed application and you follow the rules. But the longer you wait, the longer you're likely going to be sitting in an SBA queue, and the longer this is going to be hanging over your head. So again, don't wait, but we've had some great success stories. And I want to emphasize, before you start filling out your application, check with your payroll service provider. Ask them exactly what forms they're able to provide to you with respect to the CARES Act, the PPP. You'll be surprised. Many of them have already created forms that can do the FTE calculations for you and have the payroll in the exact manner you need it. Again, we've seen some minor mistakes with regard to owners, but generally they're doing a wonderful job, and it's going to make the process much easier for you. And so, again, kudos to the lenders themselves. The reps have been extremely accommodating. We know, borrowers have been reaching out to their lenders, and even though the lenders have thousands and thousands and thousands of borrowers asking questions, the reps have been very quick to respond, and we've been very impressed with the banks in this regard.
Yeah, Chuck, just to chime in on the lenders, we've had a number of clients try to get forgiveness. Their portal wasn't open with their bank yet. When they reached out to their banking relationship manager or lender, they were usually able to get that portal opened up so they could apply for forgiveness within 2 weeks. So if you're at a spot, maybe you've had us help you with your forgiveness forms, you're ready to apply, but you don't have the portal access, I would reach out to your lender if you want to apply, and they've been very responsive in getting the portal, your personalized portal, opened up so that you can apply to the SBA.
Okay, at this point, I'm going to turn it over to Tom. I'm just going to talk about income tax implications next.
Yes, fun stuff here, talking about income tax. Thanks, Chuck. Thanks, Dan, for your comments there. If everyone recalls, there are no tax consequences for the forgiveness of a PPP loan. Typically, cancellation of debt income, is considered taxable and needs to be reported on your tax return. However, the CARES Act specifically excluded any forgiveness from gross income. So nothing to worry about there. However, if you recall, back in late April on a Thursday night, the IRS snuck out this Notice 2020-32, indicating that there will be no deduction for expenses that are otherwise deductible. And in this case, we're referring to payroll costs, interest on covered mortgage obligations, rent, and utilities, if the payment of that expense results in forgiveness of a covered loan and the income associated with that forgiveness is excluded from gross income. So we already said that the income, there is no income for cancellation of debt. So the IRS is basically saying if you used your loan to pay these expenses, the payroll, interest, rent, utilities, you cannot deduct those expenses from your federal income tax return. So that created a whole hubbub of issues. Shortly after this notice was released, many members of Congress made statements saying, hey, this isn't the intent of Congress. We never intended for borrowers to get hosed essentially on these deductions. We wanted them to be able to deduct these expenses as well. And everybody, Democrat, Republican, Grassley, Wyden, Rubio, many others, all indicated this was the case. So we've been hoping since April that either IRS was going to change course on this, or Congress is going to be able to pass legislation as part of the stimulus or as a standalone bill to correct this, to say, hey, this wasn't our intent, businesses can deduct their expenses. Well, we finally got some new guidance in November. However, it wasn't really the guidance we were looking for. The IRS essentially doubled down on their position. In Revenue Rule 2020-27 that came out on November 18th, the IRS really clarified. They said, hey, taxpayers who incur these deductible expenses that were listed in the CARES Act, you cannot deduct those expenses in the tax year in which they were paid and incurred if at the end of the tax year, the taxpayer reasonably expects to receive forgiveness of their PPP loan, even if you haven't submitted that application yet. So essentially what they're saying is if at the end of 2020, whether you have or haven't applied for forgiveness, if you reasonably expect to receive forgiveness, you cannot deduct those expenses in 2020 tax year, okay? So they provided some examples in this revenue rule. Basically, the situation was you have a taxpayer, they receive a PPP loan in 2020, they pay eligible expenses with their loans, they satisfied all the requirements for loan forgiveness. In situation one, they've applied for loan forgiveness in 2020, but lender has 60 days, the SBA has another 90 days, they're not going to get forgiveness before the end of the year. And in the second situation in this revenue rule, they talk about a borrower who hasn't applied for forgiveness in 2020, but they're going to apply in January, February, in the new year. What the IRS says is that because the borrower knew the amount of eligible expenses that qualified for reimbursement, i.e. forgiveness, and they have a reasonable expectation at the end of the year, you can't deduct those for income tax purposes. Plain and simple, they're not really letting you out of this. But however, they did provide in another document released that day, this Rev Proc 2020-51, they did provide a safe harbor for taxpayers if something goes haywire with the forgiveness process. So if you're a borrower who paid or incurred these expenses in their 2020 tax year, they received the loan, they expect to be forgiven in a subsequent year, but in the subsequent year, i.e. 2021, the request for forgiveness is denied in whole or in part, or for some reason the taxpayer decides not to request forgiveness, they can then go back and deduct those expenses either on their 2020 tax return, whether it's the original filed return or an extension. They can deduct them on an amended return or AAR for the 2020 tax year, or they can actually deduct those expenses on their tax return for the subsequent year. So there's a number of outs for taxpayers who maybe expected to receive forgiveness but didn't for one reason or another. They can turn around and then deduct those expenses in 2020 or 2021.
So Tom, just to clarify, because we've already received a number of questions about this, and I know Chuck just spoke about it as far as a reason to apply for forgiveness now. This is really the reason that we were advising for a period of time to potentially wait to apply for forgiveness. And now we're saying because of this ruling, waiting perhaps doesn't make a ton of sense anymore.
Well, I don't think I think we know now that you're not going to be able to game the system and maybe apply the expenses in 2020 and get forgiveness in 21. I think there was a lot of questions about how that would work. If you could maybe do something in 2020, go back, file an amended return for that year once you get forgiveness, or do I have to wait for 2021? I think this clarifies it for taxpayers right now, that if you reasonably expect to receive forgiveness, you've done everything you need to do, you're not going to be allowed to deduct those expenses in 2020.
Right, so that's an adjustment your tax team is going to make either way. So you probably should just file now if you're prepared to do so.
Yeah.
And we're going to have a tax webinar next Thursday where I'm sure we will discuss this as well. People want to tune into that.
Yeah, for sure, Dan. I mean, we're going to have a little bit more on that next week on the tax webinar. But again, we've been telling our clients since 2020, 32 came out in April, look, if this is the way they're going to go, you know, you can't deduct. We're not going to be able to deduct these expenses in 2020. This guidance, while it's not what we wanted, clarifies the IRS's position on this. And, you know, reasonably expected, I don't know what that means essentially. It's a pretty vague term, I would think, to many people. But if you think you're going to get forgiveness, you've done everything you can, you can't deduct the expenses. Now, this may change, as we'll talk about in a few minutes, but as of right now, I mean, this is the guidance. Obviously, you know, RUG rules, RUG procs aren't law, but they're subject to interpretation, but this is the course that we're on right now.
Yeah, I just wanted to add to that. This is Chuck. You know, I appreciate our listeners who have been with us since the beginning. And, you know, many are saying, wow, this is different than what you told me before. And that's, you know, we are doing our best to take the rules as we know them and the proposed rules and give you the best advice possible. You know, at one point we thought that they were going to simplify the application process for, you know, for a large number of borrowers. And that never happened. It's only, at the moment, we've been waiting half a year, but it's only for those less than 50. Even this idea of less than 150 is not law yet, and we don't know if it ever will be for the original PPP. So, you know, that's one thing that's been evolving. Tax, Tom just talked about, that's something we've been monitoring closely. And then also, you know, just the, you know, the idea that there was other potential assistance that was going to be made available using payroll. And so we originally were thinking that maybe it made sense to keep the payroll amount in your application to the least amount possible under the rules. So you could use that payroll for other programs. That never materialized. So we, you know, I certainly acknowledge that our advice and guidance has evolved a bit as necessary. But everything we're telling you today is what is under the current rules as they are and what we think is coming. And, you know, all boils down to, if you're going to get full forgiveness, there's probably no point in waiting any longer. Get it done, get it behind you, move forward.
Okay, are we back? I believe so. Sorry about that. We had a little bit of phone problems.
So to jump back in, that kind of wraps up our tax discussion. Just really want to talk about some of the other COVID-19 relief measures that were out there. Everyone remembers the economic injury disaster loans or EIDL loans. It was a great program, one of the first things that came out in the relief early on in March. SBA is still accepting new EIDL applications until December 21st. So you have to get your application in before then. The EIDL loan can be used for working capital and normal operating expenses, and they're going to give you hopefully about a 6-month loan coverage on that. There were fluctuations up and down with how much they were giving due to the loan volume, but right now I think they are extending loans as much as they can. The revenue, the funding is there. The EIDL advances are no longer available, and like the PPP loans, SBA released all the EIDL borrower information on December 1st as well. So you can see here over 3.6 million loans were processed by SBA. I think, within the first month or so, SBA processed more COVID-related EIDL loans than they have in any disaster loan in their history. So a pretty remarkable feat by them. Next up, the Main Street Lending Program. I know Chuck and I have gone back and forth and talked about this program over the course of the last 8 months or so. Main Street closes as well on December 31st. Lenders need to submit any loan participations to the Federal Reserve by December 14th. And then the Federal Reserve, the SPV, the special purpose vehicle that's buying these loans, is stopping issuing commitment letters on December 23rd. So if you were considering this, the Reserve did lower the minimum loan size for 3 of the loans. The Main Street New Loan Facility, Priority Loan Facility, and the non-for-profit loan, the minimum was reduced from $250,000 to $100,000 on October 30th. So they tried to open it up to more people because, unfortunately, there's only about $6.3 billion in Main Street loans purchased by the Federal Reserve. While that sounds like, a good amount of money, that was only really a few hundred loans. And they expected to purchase $600 billion in eligible loans. The Reserve and the Treasury Department thought this was an appropriate amount given the financial strains facing borrowers. Unfortunately, the terms of this loan program really weren't that favorable. There were a lot of qualification requirements, and it was primarily really rejected by businesses across the United States. And then finally, on the next slide, barring any stimulus, any new deal, pretty much all the CARES Act benefits that were, created back in March are going to expire on or around December 31st. The emergency paid sick leave and family leave benefits that came out of the Families First Coronavirus Response Act, those expire as well. If there's any states that are still giving that extra $300 weekly unemployment bonus that President Trump pushed out in September, I don't think anyone really has any of those funds left at this point, but that's done. Pandemic unemployment assistance for self-employed contractors, gig workers expires. The pandemic emergency unemployment compensation, the additional 13 weeks of unemployment benefits expires. The payroll tax deferral, if you recall, businesses were able to defer the employer part of the tax, and then the president allowed individual employees to defer their part, expires, as well as the employee retention credit and all these other items listed here on this slide. So we'll see what happens with any new stimulus. Speaking of stimulus, back in July, we thought we were going to be back within 3 or 4 weeks to talk about a new stimulus package, whether it was the HEROES Act or the HEALS Act that came up in the Senate. Unfortunately, the Republicans and Democrats in Congress and the White House could not come together on any compromise since July. We've had a couple skinny down proposals. Unfortunately, the leadership in Congress could not reach an agreement. Essentially, this business liability shield and unemployment insurance benefits, as well as state and local government aid, were very hot button issues that they could not reach agreement on. There were a variety of proposals, pushed by the White House between Treasury Secretary Mnuchin and Speaker Pelosi. However, they were unable to come to any deal. I think recently that I saw that 80% of small business owners support another round of stimulus relief, according to a CNBC survey. And I think that's pretty right. I don't know why 100% don't expect more, but we'll see what happens. Just last week, I think we got the best shot at getting any type of stimulus before year end with this bipartisan proposal, and it is a proposal. I mean, it is not even written up yet in legislation. There is no text right now on this, but it came from Susan Collins, Joe Manchin, Mitt Romney in the Senate, as well as members of the bipartisan House Problem Solvers Caucus, released this framework of a $908 billion package that's been getting a lot of press and a lot of coverage in the last week. Treasury Secretary Mnuchin did offer another proposal for $916 billion that included a $600 stimulus check for each American, but did not include supplemental unemployment benefits. And Pelosi and Schumer basically called it unacceptable and, declined to further work on that. Just yesterday, we did get some summary or outline of this new Senate proposal. The one thing I want to focus on here is what the new Paycheck Protection Program would include for small businesses. Again, just proposed legislation, but at this point, this is very consistent with what we've seen in other packages, in the HEALS Act and the HEROES Act. And I think this has a good chance of becoming law, hopefully within the next week or so, because I cannot see members of Congress going home to their districts with nothing for their constituents at this point. I think it would be a disaster for all of them, and I think they're going to have to push. They have to get an appropriations bill done, and I think we're going to see this bipartisan Senate proposal incorporated into that appropriations bill, or maybe a standalone bill. I'm not sure about that, but we're going to see this just real quick on this, because I'm sure people are interested. Basically, they're going to include $300 billion in new funding for a second round of PPP, using a lot of the money that was unspent at $137 billion from the CARES Act. The key points on this PPP, your down is no longer 500 employees, but a 300 employee threshold, and there's going to be a revenue gating requirement that if you were down at least 30% in any quarter of 2020, presumably comparable to the prior year, you're going to be able to apply for this. There's an expanded use of the funds that includes supplier costs and investment and facility modifications and PPE. Interestingly enough, as we talked about the tax deductibility of these expenses, there's a fix in here for that allows for these deductions. And it also expands the simplified forgiveness from $50,000 to $150,000 loans. So there's a lot of good stuff in here for small businesses. We are going to wait and see what happens with this. The simplified forgiveness would be good. I think that would help the SBA get through the churn of loan approvals. So we will see in the next coming days and week whether or not this is going to happen. And, obviously, like Dan said, stay tuned to the, website and our email communications with you. We will update people when this does happen.
Yeah, Tom, and I just, real quick on that TPP, and then we're going to jump into questions. I think the most important thing is to indicate just because you got a PPP loan the first time does not mean you're going to be qualified for the second round. There's some significant hurdles to overcome here. One is you have to have the right number of employees, less than 300. and that's going to be across all your businesses, at least in the U.S. Second is you're going to have at least one quarter in 2020 that's down 30% of revenues compared with 2019. And third is you're going to have to still demonstrate, well, at least certify necessity. So if you're a business that had a challenging Q2, for instance, like most of us did, but things rebounded in Q3 and Q4, you're going to have a much tougher time indicating you really have a need for another loan because your business rebounded even while the pandemic has been raging. Now, I understand we're going into another shutdown, or we perhaps already are for some businesses, and I understand there's a tremendous amount of uncertainty. So there's going to be a lot of people that need this second round, and that's totally understandable. But I just want to clarify, just because you got the first round does not mean you're going to qualify for the second round. It's going to be a much narrower population that's going to get the second round of PPP.
And again, Chuck, we're looking at a third of a page summary, bullet points. We don't have any text of the legislation. We don't know what it's going to include. Y'all recall I talked about how much information and guidance came with the first PPP. I would expect a similar process, but more guidance, more interim final rules, more FAQs. So stay tuned. We'll be here to update you when we get more information.
Okay, thanks, guys. So our hour is up now, but we will stay on the line to answer questions. So if you do have any questions, we will kind of go into overtime for our Q&A session. Again, we do apologize for the moment of lost audio. I think our telecom system tuned out because they were also disinterested in the Main Street lending program, as everybody else was. So if you have questions, please feel free to submit. Also, remind everyone, if you do feel like you need to drop off or if you have something else going on, we are having 2 webinars next week. They're actually available for CPE credit for New York State, one on accounting year-end update, and as we previewed earlier, the tax one on Thursday, where we will continue to talk about some of the COVID-related tax issues, preview the Biden plan, as well as things that are relevant going into year-end there. So at this time, we'll kind of open it up for questions. And Chuck, let's start with you. Now, people say they've let staff go, but intend to fill the position and are actively posting it. How might that impact their forgiveness?
Okay, so if you let staff go pre-pandemic, during the pandemic, and during your covered period, again, that's going to be the date you received your loan funds plus 168 days or 24 weeks. If during that time you posted a position and you were unable to fulfill it, then that particular FTE reduction won't count against you. So it's good that you were actively trying to rehire somebody and you weren't able to do that. So that FTE reduction won't be held against you. If that's the case, you're just going to have to document that in case you're asked to substantiate it.
Okay, so in that situation, make sure that you have documentation that you've posted the position, I'm guessing before 12/31, right?
Well, actually before the end of your covered period.
Okay.
Yep.
All right. Another question, and this is about submitting applications. And this is something we've done with a lot with clients who've been a little nervous pressing that submit button. They're getting notices on the bank saying you can only submit one application. Can you just maybe clarify what that process might look like? You can only submit one application, but the bank will still come back to you if they have questions.
Yeah, it's an excellent question. Let's say you push the button and you made a mistake. The first opportunity you're going to have to correct that mistake is going to be your lender's going to send it back to you and ask you to correct any mistakes that they identify. Assuming you made a mistake and the lender doesn't identify it and it goes to the SBA, as long as it doesn't ultimately impact your lack of forgiveness or diminish forgiveness, wouldn't stress about it too much. However, if you made a mistake and ultimately it leads to you getting less than full forgiveness, you're going to have an opportunity, I believe, to resubmit through the lender to correct that mistake. So at this point, if you submit it, just wait. Unless you made an egregious error, then maybe you want to contact your lender and ask them to hold off on submitting the loan to the SBA until you get a chance to correct it. But minor errors I wouldn't stress about too much.
Yeah, and we've had instances with clients where lenders have come back asking for more support, different support, maybe they didn't upload the right period. It's very similar to getting a loan in other walks of life. Not as easy as perhaps the PPP loan, but if the lender has questions, they're going to come back to you before they submit it to the SBA. So you shouldn't be afraid of submitting and that's the be all end all. There's an opportunity to make corrections if the lender has questions. So Tom, we have some questions about taxes, and I know we've already kind of covered about the waiting on filing for forgiveness because of taxes. So we're not going to talk about that again. But again, if you were waiting because you wanted to maybe take those expenses into your taxes for this year, that's not a viable option currently.
No.
We have questions. Someone said they received one loan from multiple affiliates. How does this allowance of expenses work for each affiliate's tax return? And I know they were advised at the time of applying, if you had multiple entities, to perhaps lump them all into one loan. How would that work on the tax side potentially?
I mean, I think you're going to have to do the best you can to allocate those expenses to the different business entities. Obviously, if you're making one purchase and it's going out to different affiliates, you're going to have a harder time doing that. But I would assume you've done that in the past. I mean, if that's how you normally operate, then I would continue to do what I've been doing with that and maybe just reallocate, have the documentation on what's going where, as you normally would for filing your tax return. And again, hopefully this is going to be a moot point.
Yeah, and if that's your situation, probably never too early to start talking with your tax advisor about it.
The only thing I'll add real quick, and again, I'm not a tax guy, this is Chuck the auditor, but if you apply for forgiveness using $1 million of payroll, but your loan was only $800,000, and that's how much you got forgiven, it's going to be $800,000 of payroll that's not deductible, not the full $1 million. So it's only up to the portion that was forgiven is what won't be deductible. Why? Because that's the amount that you didn't ultimately pay, quote unquote, because you got it forgiven. So don't be worried if you happen to submit an application that had much more payroll on it than ultimately was required for forgiveness. That's not going to hurt you from a tax standpoint.
It's a great point, Chuck. Thank you. Another question for you, Tom. How will tax disallowance work for off-calendar year ends? And this one was specifically talking about a 6/30 year end where the coverage period goes across both years. I don't know if we have a definite answer for that.
I really don't think so. I think you're limited to, let's say your 2020 year ends on 6/30. In this case, you're going to have to probably look at applying those expenses that were used with your PPP loan over those two tax periods, those two tax years, 2020 and 2021, and then not be able to submit or deduct those expenses. The IRS really hasn't covered that. They haven't covered a number of issues with this. I think one of the big things too with that is for self-employed people or Schedule C. They haven't commented on how that's going to work because they're not going to suffer expense disallowance with regard to owner compensation replacement because those amounts are not otherwise deductible. There's no deductions to disallow. So that Schedule C filer is going to get a better benefit than an S Corp or a C Corp filer with regard to these tax implications.
Yeah, again, if that's your situation, probably a good time to start talking about it with your
tax advisor, your tax accountant, and again, we're going to have more next week in our tax webinar on this stuff. And again, hopefully, in a week, it's not going to matter. So we'll see.
All right. Chuck, a few more questions for you. Many people are using PEOs these days. It's very common, and there's a lot of great reasons for doing so. If you're using a PEO, you might not have the 941 forms that banks are requiring during the forgiveness process. What do you do in that situation?
I think you just talk to your lender rep. I think you're going to get excused from the 941 report requirement. That's definitely a question for your lender, but if you don't have them, you can't submit them. So I don't think that's going to be held against you. It's just going to require a little bit of explanation to your representative.
Yeah, and there were FAQs out about businesses that were using PEOs. It's obviously allowed. You could take the loan for it. So, no real issues there, but it's a spot where maybe having a conversation with your lender might make sense. Maybe a one-page memo even, and upload that in the space of the 941. But it's going to be something where you have to talk to your bank, and ultimately when you're dealing with the portals, they're very automated. So it might give you a little bit of trouble, and that's why you really want to talk to your lender if that's your situation. And I think another one for you, Chuck. What if you rehired all your FTEs, but facing a second shutdown, you're concerned you're going to have to let them go, or you already have let them go subsequent perhaps to the end of your cover period? How is that going to affect your PPP loan forgiveness?
Okay. All right. So let's say your cover period is come and gone, and the majority of folks have reached the end of their 24 weeks. As long as you didn't have any FTE reductions to contend with during the cover period, what you do subsequent to the cover period is irrelevant. So you can do whatever you need to run your business, including further layoffs. No problem. If you're in one of those categories where you did have an FTE reduction during your cover period, and the only way to make it up was to try to rehire everyone by a certain date, no later than December 31st, you're going to have some deeper considerations to make, as to when you want to make the layoffs for this next round of layoffs. In your case, you may want to wait until after December 31st. I hate that answer. I personally always think you should run your business like a business and make decisions that are best for the business, not to try to maximize your PPP forgiveness. However, your situation might be unique, and I would be happy to talk further about that if you're in that bucket. But as I said, there's many ways to overcome an FTE reduction. Probably the least, one of the least best ways is to try to get everybody back by December 31st or earlier. And so there's other ways to overcome it, and I would suggest we try one of those ways first, so that way you can make the right business decisions about layoffs post-cover period.
Okay, thanks, Chuck. That looks like that's. All right. Someone's asking, just before we sign off, that they're potentially exploring rolling layoffs. Is that something that they should delay until after the year? Will it have anything to do with PPP forgiveness? Probably not unless they're looking for the safe harbor.
Yes, exactly. Same answer for that particular business. So, each circumstance is different, but assuming you're okay in the covered period, you can do anything you need to post-cover period. It does not impact your forgiveness. So we should look at the facts and circumstances together and just make sure, but likely you can do whatever you need to post-cover period.
Thank you. So that's going to do it for us today. If you still have questions, please feel free to reach out to our COVID-19 team at tsacpa.com. We try to respond within a few hours at the most, so we should be able to kind of answer whatever questions you have, or if you need any assistance, feel free to reach out to any of us individually or using that COVID-19 team at tsacpa.com. Again, as I mentioned earlier, our resource center is updated almost daily, depending on what the news is. We'll have a rebroadcast and a slide deck there. We'll also have information about any future webinars and new developments that do take place with the pending legislation. We thank you for joining us today. And again, if there is new legislation, we will reach out about a future webinar. Until then, everybody have a nice day. Hopefully you can have a nice weekend and stay safe out there. Thanks, everyone.